Mercedes-Benz, a name synonymous with automotive prestige, has just experienced a seismic shock. As you can see, their operating profits plummeted from 10.4 billion to just 5.8 billion euros in 2025, a staggering 57% collapse. This marks their worst performance in decades. This isn't just a minor setback, it's a full-blown crisis for the brand. Global sales fell by over 9%, but the real alarm bells are ringing in their largest single market, China, where sales collapsed by nearly 20%. We are witnessing an automotive icon fighting for its very survival. But a dramatic collapse like this doesn't happen overnight. It was the result of a strategic gamble that ultimately failed. The crisis stems directly from a fateful decision Mercedes made back in 2022, the luxury-first strategy. The idea was to abandon the more accessible parts of the market and push aggressively upmarket, prioritizing high-margin, ultra-exclusive vehicles. On paper, the logic seemed sound, but the market had other plans. This strategy proved to be a massive miscalculation, alienating loyal customers who wanted premium but still attainable vehicles, while competitors eagerly capitalized on the gap they left behind. Their electric vehicle strategy compounded the problem. The EQS sedan, intended to be a luxury EV flagship, became a commercial failure, losing nearly half its value in a single year. In essence, Mercedes built an incredibly expensive vehicle for a market that simply didn't exist. By late 2025, the company quietly admitted this strategy was wrong, but even as they made this misstep, a new threat was rapidly emerging from the East. While Mercedes pursued its path of exclusivity, a new breed of competitor emerged from China, completely rewriting the rules of the automotive industry. Brands like BYD, NIO, and XPeng brought something entirely different to the market: software-first vehicles, cutting-edge technology, and incredibly aggressive pricing. For example, BYD's Seagull hatchback starts at a fraction of the cost of even Mercedes' entry-level models. In China, where younger consumers increasingly prioritize technology and digital experience over brand heritage, the traditional appeal of German engineering suddenly felt irrelevant. These new Chinese brands weren't just competing on price, they were innovating at a pace that Mercedes simply couldn't match. The result was a brutal price war that Mercedes was unprepared to fight and couldn't win. Their premium positioning, once their greatest asset, had become a liability, and as we saw, sales in China collapsed. This disruption from the East, combined with their internal missteps, created a perfect storm. Mercedes' internal problems then collided with a barrage of external headwinds, escalating the situation into a crisis of historic proportions. The United States imposed significant tariffs on automotive imports, which directly hit Mercedes' profitability. Meanwhile, stubbornly high energy prices in Europe drove up their manufacturing costs. On top of that, currency fluctuations worked against the company, and a general weakness in the global economy further reduced demand for luxury goods. Now, these external factors alone wouldn't have been catastrophic for a company with strong fundamentals, but combined with Mercedes' own strategic missteps, they pushed the company's profit margins to completely unsustainable levels. Management was forced to project a dismal return on sales for 2026, a mere fraction of what the company had historically delivered. The iconic three-pointed star, once a universal symbol of success, now represented a company in deep crisis, a crisis that demanded a reckoning and a complete reset. By early 2026, Mercedes' leadership finally acknowledged the harsh reality. Their strategy had failed, and a radical change was necessary. CEO Ola Källenius has now entered what analysts are calling a validation year, a critical period to prove that the company can recover. The first steps have been drastic, including announcing 30,000 layoffs and beginning a comprehensive corporate restructuring. They have made a complete U-turn on the luxury-first strategy, shifting focus back to more volume-oriented models. The separate EQ electric vehicle sub-brand, which had arguably diluted the core Mercedes identity, is now being phased out. The company has also reduced investment in expensive, long-term projects like autonomous driving, recognizing it wouldn't deliver near-term returns. Mercedes now accepts that it must compete in a diverse global market with a flexible mix of powertrains. The company is fighting to prove that even icons can adapt, but the question remains, can Mercedes truly reclaim its star, or has it permanently lost ground to more agile, technology-focused competitors?